let's get the big picture of the financial markets. First off, read this disclaimer carefully. We are going specifically in this video to look at France. It is a stock market in Northern Europe. Here you have the distance from the 52-week low and the 52-week high. And here we have some data about GDP, Consumer Price Index increase, total tax rate pretty high, 61%, and forested area. Okay, let's start with the seasonality. This shows us the percentage of months in which the France ETF closed higher than it opened between 2001 and 2020. We are in June now, and June is one of the weakest months. July usually sees some strengthening, so 58% of the time bullish. The problem is that August is a weak month, so you kind of are a bit... This entire season is not particularly strong. It gets much stronger heading into September and October. If you look at some of the earlier history, then we see that, July and August are weak, but you do see this trend that the later part of the year is strong. Hence, to sum up this entire time frame, which covers many years, the current season is weak for this ETF. That is just something to take into account. Okay, so that's part of the data we have. Let's look at the charts. So the ETF is called iShares MSCI France ETF. EWQ is the ticker. Okay. Weekly data points all the way back here to 1996. Tons of data. You can see that you had a dot-com bubble, double top, major crash. And you can see that we had a major rally, euphoric rally, double top, crash. And you can see something quite startling. Bull, bear, but the big problem with this bull market, the post-housing bubble bull market, is that it is very weak. Just look at how weak this bull market is compared to this and this. Meaning, there's been a fundamental change in the market. It is mortally wounded after the housing bubble. And this is one of the reasons why many people say that the bull market we had post the financial crisis was phony. It wasn't a real bull market, because many very important economies, they have stock charts that look like France. Rally, huge pullback. Rally, huge pullback. This pullback here is, minus 28%, which is bear market territory. This is not a healthy market. Here again, France comes with its double tops. It is double top, double top, double top. Even though you could make a case that, is this entire thing a rally within an overall bear market? You could make that case. Even though there is a bit of a rising trend, it is still rather weak. And you can see here that this low here is certainly lower than these. And you can see that this high is lower, so you do have lower highs and lower lows. That is the definition of a downtrend. Yeah, very weak. If you look here at the candlesticks, zooming in a bit, you can see that we are facing clear resistance here at the 200-week, 50-week, and the 100-week. So we have major resistance levels from the moving averages, and also a bunch of horizontal price levels that we are struggling with. The correlation with S&P 500 is very weak. It is at 28%, so there is some correlation, but not much. That is beneficial as far as creating a diversified portfolio. Though, as we saw, there was some weak seasonality. And these technicals are, we did see, a comeback after the pandemic shut down. But this candlestick here is pretty nasty, and you see this candlestick for the current week. It wasn't... Yeah, this is not a very promising candlestick. We are closing it, towards the middle, so it's very undecided. Okay, accumulation distribution line there are some buyers, but yeah. The big issue you have is that throughout this entire, bullish kind of market, I guess, or even a bear market rally, who knows, but this entire market here, it's been one that's been characterized by major rallies and pullbacks, meaning France is definitively one of those markets where you want to buy after a significant pullback. Alternatively, you want to short this market at the key resistance level, because the short selling can be quite profitable. This pullback here was minus 25%. So this is fantastic if you are a swing trader. Let's actually let's rather do let's do cycle analysis. Okay, let's see if there are some clear cycle patterns here. Let's do it like this. You could make the case that we have some cycle patterns here, rise, decline. These are some of the more major cycles. There are clearly some smaller cycles within these. Looking at these major cycles, you could make the case that there could be some, maybe like a rising cycle, decline, and then a rise to fit, with the characteristic, smaller cycles within these major ones, because you can see that within the major cycles, there are usually two intermediate cycles. So let's actually paint those cycles as well. If we can, let's do it a little bit like this. If we can capture the cycles. No, not that well. Yeah, maybe a little bit. Like that. Let's give these ones another color, like pink. Okay. So you can see that here are the major cycles, and within you usually have these two smaller rising cycles. That's interesting. So cycle analysis, it is a different animal, but there are clearly some cycles to at least some charts. Okay, let's jump to the daily data points. If you look here at the moving averages, they are thrown around a lot because of the very cyclical nature of the France stock market. We are below the 200-day moving average, is quite negative, and we are finding support at the 20-day moving average. The problem still is the seasonality. We did see that July, June, and also August are characteristically mediocre months for the France stock market. Okay. Here you can see some data, year-to-date performance, and some other data. The performance for the quarter, 32%, so definitively some very strong rallies when there are rallies. Here you can see the valuation. You can see that the PE is currently at 15. Let's look at some of the alternatives. EWQ, very low PE, that's Australia. Yeah, much better PE there. This is IPOX Europe Equity Opportunities ETF. Yeah, that one had almost a 30 PE. Looking at the dividend, it's 0.90% here for EWQ. Not particularly impressive. What is this one? This one has a 7% dividend. This is the currency hedged MSCI Eurozone ETF. So if you are big into dividends, then this is another European ETF. Let's look a bit at the holdings. You got some very famous company here, like Moet, Hennessy, Louis Vuitton. This is obviously highly discretionary stock. This is not something you would ever spend money on if there are some troubles in the economy. Luxury product, L'Oreal, Schneider Electric, Airbus, Kering. Yeah, there are many famous companies in France. It is one of the countries in the world with most history. You can see here the sector breakdown. You got a nice mix here. Industrials is actually the biggest, and consumer cyclicals. Yeah, interesting. Market cap breakdown, bunch of large caps. Yeah. Okay. Let's now look at some of the other markets. Let's look at the VT, which is the total world stock market ETF. Yeah, you can see that we are above the 200-day moving average, but we are seeing this weakness that we see also in the S&P 500. We had this strong rally that was kind of quite euphoric. We got overbought. Then we had this very nasty day with selling, a bit of a comeback, but then we are bleeding out a bit here. But all in all, you could make the case that the bulls are in control. The problem is that many stock markets around the world did not recover from the housing bubble, meaning the reason why the VT looks the way it is because there are some companies that have a lot of weight and are sort of hiding the damage underneath. And the damage underneath is something that's been languishing for many years. That's the issue. Because there are many countries that have stock charts that look like France, long term. Let's look at the BNDX, the bond market. Loading the moving averages. We do have a rather clearly defined downtrend, lower highs, lower lows. The current rally here is very interesting because we have seen this failed breakouts above the 200-day moving average before, here, fail. So that's like the litmus test here. That's going to be very interesting. We do have a negative divergence between price and the RSI. So this is one to keep on your radar. If you do see some deterioration here with this rally, then there could be some shorting opportunity. We did look at gold on the Friday video. We have been consolidating sideways for quite some time, even though historically there are these declining cycles. We haven't gotten that yet, and we are heading towards a very strong season for gold. That's just the way the cookie crumbles. So maybe we're not going to get that correction before that next big push. Yeah, gold very, very, very strong. Let's look at Bitcoin. Bitcoin, US dollar. Yeah, Bitcoin, we did see this big rally. We are consolidating sideways, which is something that I was hoping for, because in order to break out above these levels here and these ones, very critical resistance levels, we need to have the energy to pull that off. Cooling down a bit sideways and then making the push, that is the strategy that is most likely to be successful. So yeah, I do like Bitcoin. The problem I have with Bitcoin is that the essence of Bitcoin is that it's a speculative investment. There is very little reason to think that Bitcoin will be actually used for commerce because the price is very volatile, and it is by design volatile. But I am very bullish on digital currency becoming the norm in the future, though I have an extremely hard time seeing that being Bitcoin due to the volatility in the price. But yeah, very interesting move, consolidating, and hopefully we will make the push. Let's look at the VIX, the Volatility Index. We are still at some elevated levels, like historically. If you look at the longer history here of VIX, zooming out, we are currently here. And you can see that this is a historically very elevated level. So there is concern in the market for very good reason. We have seen a huge increase in the price volatility. The market can very easily move up very big percentages. That is not sign of a healthy market. That is sign of a market that is really struggling to price. This is one of the reasons why I'm saying many times, be very diversified and very careful. This is not the good old market. The market has changed, and you could make a very strong case that the initial huge paradigm shift happened in the financial crisis in 2008. That's when everything changed. Many markets around the world show you that there is something very seriously pathological happening underneath. And the pathology has increased dramatically this year with absolutely unparalleled price moves. Yes. Let's look at some commodities. Let's look at the now. I mean, there's so many problems with this ETF. Let's look at energy through the XLE, which is a better way to view it. Zooming out a bit, looking at multiple years, You can see here that quite clearly we do have a downtrend overall, but the rallies are pretty substantial. Hence, this is one of the reasons why I say that I am very, as far as long-term investing, I prefer clean energy, but as far as swing trading, the energy sector, fossil fuels sector, is very fantastic. So here I have a bullish move of 104%, and if you use options or leverage products that will be much bigger, here you have a pullback already at approaching 16%. That's big. We are vulnerable at this point. So here we have bulls in control. Here is more of a standoff. The bears do not need to do much damage to trigger a sell-off. Then again, the bulls, if they make a more aggressive move, then they could repair some of the damage. So this is a standoff. This is really a standoff. Though long term, to be perfectly clear, long term, looking multiple years into the future, I am extraordinarily bearish on the fossil fuels business. As far as XLE goes, the tricky thing is that many solar energy companies and clean energy companies broadly are categorized as industrials or technology companies. However, if we see more recategorization in which the clean energy companies are included in the XLE, then we could see a major change here for the XLE. Meaning, you could have a situation where the XLE is also a way to get very good exposure to clean energy. In that case, I would be long-term, super bearish on the XOP though, which is the oil and gas ETF. But huge swing trading opportunities. Okay. Let's look at the dollar index, UUP. Oops. UUP. Yeah, this is another sign of a market that is not healthy. The dollar is the world's reserve currency, and it should bring stability to the market. This is not stability. Huge moves up and down. We have slipped below many key moving averages and support levels. So we are basically in this massive consolidation mode with very big price moves. And the future strength of the dollar it's very much contingent on how willing the Federal Reserve is to print money. So let's look a bit at some seasonality here towards the end. Like gold, we have looked at gold. Let's look at the UP, which is the dollar index. Go. Like that. Yeah, you can see here that June is a very weak month for the dollar, but you can see that it does improve in July, August. That's the UUP. Let's look at XOP, which is the oil and gas ETF. You can see that August, very weak, but September, pretty darn strong. Let's continue. Here we have Bitcoin, US dollar. You can see that this current season is actually not good for Bitcoin. That's something to be a bit wary about. Major decline towards August, then improving later in the year. Okay, that's something to think about as far as the major consolidation we are going through. Let's, towards the end of the video, look at some of the Fang stocks. Here I have Facebook. June strong, but it does weaken towards the later part of the year. Let's look at Amazon. King of e-commerce. Oh, now we are getting towards the end of the video. Do see a bit of a weakening heading into the autumn, but then huge strength in November. Let's look at the Netflix. A major. Okay, you can see that July, which is the next month, it is the weakest month for Netflix, but then strengthening towards the end of the year. Yeah, okay, whatever you do, of course, do not fight the trend, and may the trend be with you.